We are going to cover May 4th through the 8th. This week was a great week for bulls. If you are on my weekly email, I said that going into this week on Friday, I said if the stock market, the SPY closes high and stays there, I'll go long. And in fact, it did go higher the next day, and it ended higher on the week. I said in my email that I'm actually bullish going into this week, this summer actually, and that the sell-off in May wasn't gonna be as deep and as bad as people think, because this is not an ordinary year. So since the market's already been depressed for the past two and a half months, people are ready to get back to work, and they are wanting to leave the house and go somewhere and do something. So I believe that this summer, the energy names are going to start coming back. The SPY is going to come back. All the stocks are gonna start recouping their losses for the year. So if we take a look at the SPY and see where we've been for the past 6 months, let's see, 3 months. So March 24th, 25th was the bottom, and we just slowly went higher. You can see the volume candles here where it was pretty high to this sell-off here, and then it went back up, and the volume was pretty great here, and now it's kind of tapering off. You see how the volume candles are like getting smaller and smaller, and this is just floating higher. This is a bullish sign. So you never want to be shorting too heavily when the market has low volume and it's just continuing to float higher gradually. That's a sign you shouldn't be short into this market. But we are at a resistance zone, the 61.8% Fibonacci retracement. I talked about that in my email, and that this is an area of resistance, so we want to watch this area first before we do anything. Ideally, you want it to break above this area and then chop sideways for a while, and then take the long trade, go higher. But you kind of want to watch this, because this could break out and then come back down and close lower, and then continue to drift lower, and then you don't want to be stuck holding a stock that you don't want to be in. So the stocks that I'm looking at this week, I'm actually looking at DKNG. This is DraftKings. They IPO'd back in April 24th. Almost what was it, like two weeks ago actually? Yeah. This one, it's an IPO, and since all the casinos were closed, people still want to gamble. They're going to get their fix some way, and online gambling is the next best thing. It's also something they can use while gambling in the casinos when the casinos do come back. So yeah, there's going to be people gambling. Football season's coming up. Football is a huge betting sport. So football starts to reopen, you're going to see this thing go higher. I like this one. I like the chart. It looks pretty strong. It's above its IPO high. It's going to hang around. If it holds this area here, and it retraces up higher, I like it. I like it to break above the $26-27. So this is a casino play. Let's look at the other casino, Win. In my email, I am long-term holder of Win shares. Okay. I was shorting this. I did short this one from here all the way down to here. I covered at the bottom right here. But since then I've been long. I've been selling puts in Win shares. So I actually have a couple $100 puts sitting up here, and I'm collecting premium. So if it hits that, I collect all the premium. But if I don't, if it doesn't get above $100, I'm gonna own this one, which is okay with me, because I long term this thing hovers in the $120–150 area, so I have a lot of room for upside, especially if the economy is going to be coming back into the summer and fall. You're going to see this whole move just retrace back up. It might float up back higher to about 120. This is where you would have some resistance right there. So this chart actually looks pretty good to me. It's got higher lows and it's trending upward. It broke above this and now it continues to trend higher, and all it has to do is break this, and then you can see 100 fairly quickly. Since the economy is coming back, I'm looking at the XLE, the energy sector ETF. This one got hammered pretty hard, so $50 to $5 got pounded because no one's driving. But again, the economy comes back and people are dying to leave, to go out and do things, go back to work, blah blah blah. They're going to be using their vehicles, and here's my theory, is that if people are still afraid but they still want to go out, they'll be too afraid to use public transportation because you're going to be clustered with a whole bunch of people, so trains, buses, airplanes, so people most likely be using their own vehicles to be traveling. So that means a lot of people will be consuming gas, oil and gas. So this one could retrace back up higher within the summer. So we're looking at about a $15 gain here, $15 per share gain. So that's pretty huge. So if you can't afford $39, this one, Oxy, I've been looking at this one for a while. This one has a nice chart as well. It's got a long L-shaped recovery here. If it breaks above the $17–18, it looks like it's trending up higher because you got higher lows here. If it breaks above this, it's actually a good long. It could take you all the way up to $30 a share, so you can actually double your money if you're willing to buy Oxy, OXY shares. What else am I looking at? Well, you can never go wrong with Disney. Disney's opening up their parks in Asia, and within the first couple minutes of releasing their tickets, sold out, because they're only allowing a limited number of people into their parks, and so people snapped up those tickets. So if that happens here in the United States, same thing. It's gonna happen. Like, people are gonna be dying to go to Disney. I mean, it's gonna be great being inside Disneyland because, again, there's not that many people, and you can experience and see and do all the things you want, in a shorter amount of time because there's less people. So for this one, for Disney, I like it as well. I'm actually a long-term shareholder. I've sold puts into this one as well, and I can see this one going back up to 140 a share. But so this one is a nice, it's consolidating here. It didn't drop that far, and it's been consolidating within the 96 and 107 range. So now that it's breaking above 107, all it has to do is break above this 114, and it can see 130 pretty quickly. The next one I'm looking at for next week is Zoom. This has become a household name. A lot of people are using it for work and school. But here's the thing: we have one more month left of school, and kids aren't going to be using this anymore, right? They have earnings coming up soon. They are going to report that yes, there's a lot of users using their technology, blah blah blah. They fixed their security issues, but it's summertime, and if we get back to normal, no one's going to be using Zoom anymore, right? Maybe the work will continue to use it, but it's not going to be nearly as many people using Zoom on a daily basis as we have experienced. So I am short bias. I am a bear when it comes to Zoom. I think this might be the peak. it's actually a nice short here because you've got a resistance zone right here that it's actually now hit. So it's a good idea to take it here, use all-time highs, or around the 175 180 range as your risk. Take the short up here in this area, 160s, and use $20 as your risk, and you could have a huge downside, because I actually could see this going below 100 at some point. So yeah, so going into the summer, I am short Zoom. There's some smaller plays I'm looking at, talking about when they said they're going to introduce thermal cameras into their casinos, and so the company that makes thermal cameras that they're partnering with is Mark. This one is a penny stock, but I think a lot of other casinos and hotels and probably airports and places where there's going to be a lot of people, they're going to want this technology where they can scan people as they walk in and see their body temperatures to see if they may be sick. They'll turn them away at the entrance. So this is one that I'm taking a look at. It's got a nice chart. It's pretty quiet, around 40 cents. Now people are starting to pick it up, and they're starting to find out what this is. Another one is, actually, that's pretty much it for this week. So if you're not part of my emails and you want to be, just drop me a message, let me know, and I'll add you to the list. But for next week, I am still a bull, but I am short biased some names. But I do like this chart. I like how it's trending up, and it's holding this 50 to 62% Fibonacci retracement. If it holds here next week, and it could trend higher, and your resistance is here, but it could retrace the whole entire move, and it can shock people. And people are thinking, hey, this is going to come back down, and it's going to keep going all the way down. But with the Fed pumping unlimited stimulus money into the economy, this is artificially held up here. So you're not going to see the huge dump like in 2008 or 2000, because the Fed, in my opinion, they acted proactively, whereas in the previous market crashes, the Fed reacted. So they only introduced stimulus and physical measures after the crash had already happened. So this is a little bit different than before. And the unemployment numbers, even though we're breaking records and it's as bad as in the Great Depression, these people aren't technically unemployed. They're unemployed for now, but then if the economy gets back up and running, their employers will just call them all back. So it's a little bit different, but there's a lot of noise out there, and people trying to scare each other and saying this is going to tank and retest the lows, blah blah blah. But I don't think so. I think this is going to either hold or continue to float higher. And when it gets back up to here, there's going to be a lot of short sellers capitulating, and this thing is just going to rocket higher than where it was prior. So, this stock market will probably surprise a lot of people. There's a lot of people with money out there, and they're still buying stocks. But yeah, that's it for this week. Again, let me know if you want to be part of my email list. But yeah, that's it. Alright guys, good luck trading next week.